big news of the day, the inflation came out hotter than expected, and is going to continue to rise, as we've been talking about on this channel for the last couple of months. Inflation has not peaked. It is getting worse every day, and the June inflation report is going to be even higher than the May inflation report. As you and I know, if you're out there buying stuff, filling your car up with gas, buying groceries, going out to eat, movies, anything like that, everything has gotten more expensive pretty much everywhere in the economy. And we've only begun to feel the effects of it. Energy costs this fall and winter for people that have to use heating oil, propane gas, things like that to heat their homes, and then electricity. Electricity is going to go up due to energy costs in general. So we're only at the beginning of inflation and also recession. The economists, the academics, government officials have been denying that inflation is real and have saying that it peaked and it's coming down. They're just not grounded in reality. We all know that inflation has gotten worse. It's going to continue to get worse until they actually do something about it, take real action. The Fed hasn't really done anything yet. So next week, when the Fed meets, is going to be very interesting to see if they actually go 75 basis points or 100 instead of 50 to try to show that they're serious about inflation, because right now they have not shown that they're serious or interested in really fighting inflation at the consumer level. So you got to love this guy here, right? They always show him whenever the market has a big down day. Dow Jones was down as much as 800 points, about 2.5%. S&P down 2.5%, NASDAQ down 3%. Markets bounced a little bit, and it's 2 o'clock in the afternoon Eastern Standard Time. And as I always say, watch the momentum into the close. I expect the market to sell off into the close and continue to unwind a little bit. As we get into next week, probably next session, we'll get a nice little bounce ahead of the Fed. But the expectations are going to be that the Fed is going to take some sort of more drastic action to fight inflation, but chances are they probably will not, based on Powell's history. He has zero credibility that he even understands inflation. And that's really the thing. I mean, if you don't, you have to acknowledge the problem before you can even solve it. So you can't fight inflation or solve inflation if you're not even acknowledging that inflation is real. And like I said, the politicians, the academics, and a lot of the economists have been saying inflation peaked, that it's coming downhill, it's only going to last a couple months, it's transitory, all those different things that we all know is just not even reality. It just doesn't make any sense. And Biden's out here right now giving his little speech on how he's going to fight inflation, talking about all the jobs he's created. The economy was shut down when he took office. You open it back up, people go back to work. He hasn't created anything. It's just people going back to work as the pandemic has opened up. Everybody opened up after the pandemic, and now we've got more and more layoffs is what we're looking at. So unfortunately for Biden, and this isn't, political lines, Democrat, Republican, whatever, if there was a Republican in the office, it'd be the same thing. He's going to go down as the worst president in history next to Jimmy Carter in terms of, the inflation and the economy and just all of that. And, it's really, really hurting the average consumer out there, the average American out there right now that has either a fixed income or a limited income source. You're talking about people having to spend $400, $500, $600 a month just to wake up every day, more than they had to 2 months ago. So this is a real problem. They have to get a fix on it. The unfortunate part is the Fed cannot actually do anything about inflation. They can't increase supply. All they can do is destroy demand. So the only way to do that is to put the economy in a recession. And that is the next thing in there, is that Treasury rates are up on the hotter than expected inflation report, and strong inflation has consumers anxious about a recession. And again, the academics, the government officials, and some economists are denying the fact that we are and have been in a recession. And again, we've been talking about that for a couple months on this channel, that we are and have been in a recession. So anyways, it's just the economic cycles, right? This is not doom and gloom. It's the reality of the situation. And all things being equal, Bitcoin is hanging in there right now, but Bitcoin's been lagging the markets the last couple of sessions. So I'd be careful with this, Bitcoin and crypto. If the markets have a big sell-off, Bitcoin and crypto have been kind of hanging on, and then they would, they've been dropping a couple of days after the traditional markets have sold off. So this is Bitcoin on the hourly right here. sold off a little bit back to the lower levels of this whole range, and it really hasn't broken this range low right now, or this range of support right now in that $28,500 range. So we'll have to see whether or not that holds and how long it holds. Ethereum kind of hanging on to that 17. Whoa, well, Ethereum broke that level. I hadn't watched it in a minute. It was hanging on to that 1700 level, but now it's broken down to 16. So Ethereum's leading the charge. Bitcoin will probably be the next shoe to drop here. The altcoins are going back and breaking some of these, trend lows that we've seen here recently with Solana, AVAX, Cardano. There was some news in the Cardano space about some developments. It's, had that nice little 77% bounce, and it's starting to unwind that move again a little bit. So we'll just have to keep an eye on things and how they develop. And, big down day in the market, so you can expect crypto, to be down as well. And again, Bitcoin's been lagging a little bit. I hadn't looked at ETH lately, so it's surprising to see ETH kind of leading the downward trend there. But, that could be the beginning right there. Bitcoin dominance, I think, let's see where that's at today. Kind of hanging in there, down a little bit from the recent ranges. Let's take a look at it on the daily. And, Bitcoin dominance has been continuing to rise, kind of hitting a little bit of a resistance level here. So we'll have to see if it can break through there and continues to rise, meaning Bitcoin versus altcoin pairs, Bitcoin maintaining strength while the altcoins continue to sell off. And that's kind of what we're seeing now. Bitcoin's maintaining a little strength while the altcoins are dipping. Let's look at the Dow Jones unwinding this latest bounce, this, bear market rally, dead cat bounce, coming down to test some of these lower low ranges. NASDAQ doing the same thing, S&P doing the same thing as well. So finding a little support at this lower range here. So we'll just have to see what the market does in the afternoon and whether it's going to continue down into next week. And again, if the Fed comes out aggressive, markets will continue down and continue to unwind. The biggest risk facing the markets right now is the QT. I think, that's not priced into the market. Some of the interest rate policy is starting to get priced in. But again, this isn't going to happen overnight. It takes a while to unwind really 11 years of QE and zero interest rate policy, this mega bull run that we've been on really in the markets. Let's go to the weekly here since really since 2009, when all of that started, when the Fed stepped in to rescue the economy. We've been on this just bull market trend ever since. This is the market that Bitcoin was created in. We've been on this bull market trend, and all of the traditional markets, all of the asset markets, housing after 2009 just been kind of straight up. It's in kind of a bubble too. Take a look at Bitcoin since 2009 when it was created. In its history, it's just been pretty much straight up. So all assets are a product of quantitative easing, zero interest rate policy, and all that's got to unwind and have to rebalance. But these events, like we're in right now, as you can see back here in 2008-9, it takes a while for things to kind of unwind and kind of work their way back to nominal levels of where they came from. So let's take a look at Bitcoin here. Still kind of hanging out in this range. This is the weekly. Let's take a look at Bitcoin on the daily. Nothing new happening here, just holding its own, maintaining this support level. But if we look at Ethereum is working on breaking major market support structure levels right in here. Let's take a look at Avalanche, same thing, major market support levels. Solana, everything's kind of right in there in that main support level, where one more leg down takes it back to where it basically started before the main bull run here. If we take a look at the averages we've been watching, here's the 200-day moving average up here, 100-day here, 50-day here. Really what Bitcoin needs to do is get back above this 50-day moving average and maintain that as support to have any kind of a hope that price is going to hang on here. And again, continuing to work its way down to this 200-week moving average like it's done in its previous history every single time. The question is, where's that going to be when that comes in, and will it hold? So we'll have to wait and see for that to happen. Right now, given the global macroeconomic environment, our Gaussian channel continuing on its, turning red. And we've talked about that whenever it turns red, it stays red for approximately about a year as price kind of goes down and then works its way back up. So we'll just have to watch these developments and see, number one, how does the Fed respond? Number two, how do the markets react to that? And we know if the Fed comes out dovishly hawkish, meaning that they say, hey, inflation's bad, we got to get serious, we're going to take action, but we're going to watch the data. That is how you define dovishly hawkish, and they just do their 50-point rate hike and they continue QT as they have talked about rolling off. And again, they're just letting the markets know that they're not in any way serious about fighting inflation. And if they don't take action and do anything, the markets are going to do it themselves, meaning that you're going to see real damage in the market if the Fed does not act. If the Fed acts, the markets might bounce a little bit, understanding that the Fed has finally faced the reality of where they're at and that they know they have to get this under control before it unwinds further and it gets to a point to where they can't do anything about it and they can't step in. And that's the real risk out there. The markets have not priced in. The markets have not priced in the full effects of QT sucking the liquidity out of the markets and credit markets tightening up. And they certainly have not priced in what happens if the Fed can't do anything and it's too late and it's beyond the ability of the Fed to do anything to stop what's happening. The housing market unwinding, markets unwinding, liquidity drying up, credit markets cracking, things like that. They can't reverse course because you cannot continue on the path of inflation that we're on. They have to destroy demand. They have to put the country in recession. I think soft landing with this recent inflation report, I think the soft landing is off the table at this point. There's never been a time in the history of the Fed with this type of policy that they've been able to engineer a soft landing. They've come close, but they have not been able to pull it off. So we may be in for a little bit of a bumpy ride here for the rest of the year. But what that does is it also creates opportunities, as we've talked about, as markets continue to delever and reset in pricing. That's where your entry opportunities are to create very nice generational wealth building moves in the markets, real estate, stocks, crypto, everything. Crypto market will get cleaned out, wiped out. A lot of the altcoins will go away, especially with regulation coming. So be careful what you're into there and just understand the types of assets you're investing in and whether or not they can survive a cleansing of the market and whether or not they have long-term stability behind them and underneath of them. So these are the things I'm looking at right now. We have to look forward to the Fed meeting next week, see how they respond to the inflation report. There's going to be all kinds of talk out there about how they could potentially respond, what they're going to do, what they won't do. Problem is they've lost all credibility. They are behind the 8 ball on inflation. So they have to get out there and get serious. If they do not, then I think we might see more damage in the markets more quickly. If they do jump out and take action, you might see a little bounce. So we'll continue to watch the markets as we go through the day to day and watch Bitcoin and crypto over the weekend. Could be a volatile weekend. Again, Bitcoin's been lagging the market, so the next leg down in Bitcoin could come maybe later tomorrow or over the weekend. And we're already seeing Ethereum and some of the altcoins start to unwind a little bit. So we'll keep an eye on those things, and I'll see you in the next video.